Well, aloha! It's Friday here. Well, here we are. It's Friday. It's November 22nd. Can you believe it? It's less than a week away from Thanksgiving. Thanksgiving weekend is next weekend and Turkey Day. So there'll be some staying at home, relatives coming over that you don't like, and eating turkey. And the weather, it's cooling. It might even rain this weekend in Southern California. Northern California is just getting beat. Their atmospheric river is just flooding up there. And the mountains are getting snow. A lot of ski resorts are opening this weekend. So if you like skiing, it's the season started. So the election's over with. We all know that. But let's look at what's happened with mortgage rate volatility. We all were looking at the rates beginning to fall because the Fed was reducing their rates. But if you've been keeping an eye on the mortgage rates lately, you might feel like you're on a roller coaster ride. One day rates are up, next they dip down a bit. So what's driving this constant change? Let's dive into just a few of the major reasons why we're seeing so much volatility and what it means for you. Now, first of all, a significant factor causing fluctuations in the mortgage rate is a general reaction to the political landscape. You know, election seasons often bring uncertainty to the financial markets, and this one did, and this one was no different. Markets tend to respond not only to who won, but also the economic policies they're expected to implement. And when it comes down to what's been happening with mortgage rate over the past couple of weeks, as the National Association of Home Builders, NAHB, what a mouthful, said, the primary reason interest rates have been on the rise pertains to the uncertainty surrounding the presidential election. Although the election is now complete, there continues to be growing concerns over budget deficits. In the short term, this anticipation has caused a slight uptick in mortgage rates as the market adjusts and reacts. Additionally, factors like international tensions, supply chain disruptions, trade policies can drive investor sentiment, causing them to seek safer assets like bonds, which can indirectly impact mortgage rates. Essentially, the more global or domestic uncertainty, the greater the chance that mortgage rates may shift. And we know that there is some global uncertainty right now. You know, what's going on in the Middle East, what's going on between Ukraine and the Soviet Union and Russia is a little crazy. So the economy and the Federal Reserve, they also are a big big deal with the rates. Inflation and unemployment are two other big drivers of mortgage rates. Now, the Federal Reserve has been working to bring inflation under control and has been closely monitoring the economy as they do. And as long as inflation continues to moderate and the job market shows signs of maximum employment, the Fed will continue its plans to cut the federal funds rate. Although the Fed doesn't set mortgage rates, their decisions do have an impact. And typically, a cut leads to mortgage rates response. And in their November 6th, 7th meeting, the Fed had the data they needed to make another cut to the federal funds rate. While that decision was expected, and much of the mortgage rate movement happened prior to that meeting, there was a slight dip in the rates. Now, as we look ahead, mortgage rates will respond to changes in the Fed's policy and other economic indicators. The markets will likely remain in a wait-and-see mode, reacting to each new development. And with the transition of the new administration comes an element of unpredictability. And with this administration, it's unpredictability. A recent article from the Mortgage Reports explained today's economic indicators come with mixed pressures on mortgage rates, and we're likely to be in a good amount of volatility as markets adjust and respond to the election. The best way to navigate this landscape is to have a team of real estate experts, me, Jamie Barber, by your side. I can help you understand what's happening and provide you with the guidance you need to make informed housing market decisions along the way. The takeaway from all this, today's mortgage rate volatility is going to continue to be driven by economic factors and political changes. Now is the time to lean on me, your trusted real estate agent, and a mortgage lender. And I have a mortgage lender, and with the right guidance, we can help you make informed decisions. All right. Well, you guys have a happy Thanksgiving. I'll see you next Friday after Thanksgiving. And enjoy yourself. Don't eat too much. And stay dry this weekend. All right, now. It's Aloha Friday. No work till Monday. Well, of course, unless you're in retail sales, hospitality, or you're a realtor, then we're working this weekend. All right. Well, you guys have a great weekend. And again, stay dry and see you next week. Bye, y'all.